How are the short-term charts shaping up? When will be the best time to buy altcoins? And how are the macro charts looking? Let's go ahead and dive into the video. Okay guys, thank you for tuning in. I hope you're all having a fantastic day today. Are you trying to buy altcoins as low as possible, or are you just trying to get in at the safest entries? These are questions that we're answering in today's video based on historical trends and data. We're also going to be going over the overall cryptocurrency volume and talking about the short-term charts. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and of course, the relevant economic news. No BS, no hype, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and of course, the relevant economic news. If you are interested in trading, contact me via the pinned comment in this channel to join the VIP group. We post trading signals with exact entries, exact targets, exact stop losses, and trade justification. No one is going into the level of detail we are doing in this VIP group. Not only will you get access to a multitude of trading signals, you'll also get access to our group chats, our general chat, our trading chart and education chat, our news chat, our trade setup chat, help chat, and of course, our videos. If you're interested, contact me for more information. Let's go ahead, guys, and jump into the market data. How are we looking for today? Bitcoin's volume has risen by 73.14% in cryptocurrency, should I say cryptocurrency, not Bitcoin, up to 47 billion. Looking at the overall 24-hour liquidations, we have seen a pretty big jump up to 49 million, up 182%. Currently, August is almost done, and we are looking like we are going to be closing out this month relatively red. We're currently down 11.13%, moving into September, which is historically a pretty red month. Now, it's not the most red month in terms of percentage drawdowns. It does only have an average 5.43% drawdown, but if we're looking at the total amount of months of it, which is 13 months, and we go ahead and say we have 13 months and 10 of these have been red, we have a 75.6% chance of September actually being red. If you want more information about that, and you want to find out the analysis we did in relation to the drawdown percentages and the targets for September, watch yesterday's video. It is all in there. Moving on from there, liquidation data, guys, 49 million in liquidations. The majority of those liquidations actually coming from long positions on quite a violent, yet quite sporadic correction on the short term back down to our demand zone. Moving back on from there, looking at the volatility index is still very, very low. The 60-day is still gradually declining as the 30-day is plateauing, but again, slightly declining. Let's go ahead and take a look at DXY. The DXY is, of course, retesting that resistance. We have closed a daily candle underneath. This is a sign of a possible rejection. Again, if we do reject from this level, this could provide some short-term relief moving into September for Bitcoin, for the traditional markets. Again, we do have support on the short term over here for the DXY. This is going to be the 103.5 level. If lost, we can expect a retracement back to retest the dotted trend line. A loss of the dotted trend line will result in the downtrend commencing and continuing downwards. Until then, we are in an overall uptrend as we have broken out of the downtrending diagonal resistance, and therefore any pullback should be considered a healthy correction on the trend toward the upside. Targets of the upside are, of course, 105 to 106. A breakout of 105 to 106 will be breaking out of a 1 year long horizontal resistance and will put the DXY back into a high time frame uptrend, which will be incredibly bearish for stocks and cryptocurrency. This is incredibly This is very, very bad, and it should be something we are paying attention to moving forward. Looking at this stock market, some short-term relief, but again, not really enough to regain any strength. We do have a bearish divergence printing over here at this local area of resistance. The price has rejected and retested the uptrending diagonal midline, as well as the horizontal resistance marking the local top right over here. We do see a rejection from that point, therefore resistance is resistance until it is not, and we do expect the price to continue down toward this horizontal support zone, meeting this uptrending diagonal support level at that area of confluence, the next support for the S&P. The Dow Jones is in a similar position, but again, it has kind of sped up a little bit, retesting the uptrending support a little bit sooner than the S&P. Again, currently retesting the level of resistance with 50 EMA resistance, and of course, this horizontal chunk of resistance that it is retesting. Therefore, resistance is resistance until it is not, and we should be expecting a failure to break above until proven otherwise. If we fail to get above and we clear this local low, we can expect a continuation downwards. If we push upwards, we do need to start clearing some of these high points at 3,500 to push any higher. Let's go ahead, guys, and jump into Bitcoin, and we're going to start off with talking about the overall volume in cryptocurrency. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. If you've been in Bitcoin this year, if you've been trading this year, you would have noticed over the last couple months, volume has really been dissipating. And you've been hearing me talk about this relatively, quite a fair bit of times actually on the channel, particularly talking about volatility, particularly talking about momentum, and now of course talking about volume. All three of these metrics are very evenly tied together, and again are very significant in terms of overall strength and continuations / reversal patterns developing. If we take a look at the volume on cryptocurrency, this is a total cryptocurrency market cap. We've gone ahead and brought the volume up. We can see currently the volume is retesting low points we haven't seen since all the way back in 2019. This is actually relatively significant for the charts over here. It's telling us volume is dropping down to 2019 levels. It's actually quite important, it's quite significant, and it actually is quite interesting to be actually viewing the data over here and viewing the volume data. And this is showing us that volume is in fact, on the decline, has been on the decline for quite some time. It'd be very nice to see a surge in volume to actually impact the charts and to kind of trigger any sort of reversals developing from these low points. Until then, if we have increasing price action but falling volume, this is always going to be a sign of exhaustion, always going to be a sign of weakness, and it very, very rarely leads to any sort of continuation upwards. We do need to start seeing that volume clear out these high points, clear out these highs, and start pushing upwards with the price action rather than them moving in opposition. Moving on, guys, let's go ahead and talk about altcoins. So we'll talk about Bitcoin, we'll talk about altcoins. When is it the best time to buy altcoins based on historical trends? You have to ask yourself these two questions. Are you trying to buy at the lowest possible prices? Or are you trying to buy at the safest macro entries based on historical trends? To answer that first question, are you trying to buy at the lowest possible prices? That is not something we can possibly do right now, as again, all altcoins are separate. They have their own charts. They move in correlation with Bitcoin by completely different ratios. So you do have to review the particular altcoin you are viewing individually and do your own structural and volume-based analysis for that coin. But that second question is something we can definitely take a look at. And the second question is probably one that you should be focusing a little bit more on, because this is not only the safest time to be buying altcoins, but it's when altcoins perform the best in terms of bull markets, in terms of bear markets, according to and in comparison to Bitcoin. If we take a look at the prior cycle for Bitcoin, we can see the cycle really started kicking off. The bull run really started kicking off for Bitcoin when we broke above this local high point. We can go back to the Bitcoin charts and the monthly charts and show you in a second. We can see we really started kicking off this bull run when we broke above that high point in October, November 2020. If we go back to these macro charts really quickly, we can actually see on the chart that was the same point we entered this green bull run phase. It was also the same point that we broke above this dotted trend line, the dotted trend line being the dead cat bounce high point of the prior cycle. Again, if we take a trend angle analysis from the bottom, okay, and we drag that to the dotted trend line, and then we drag it from the dotted trend line to the top, we can see very interestingly, the trend angle significantly increases past that dotted trend line as prior to the dotted trend line. This signifies a surge in volume, a surge in volatility, and more importantly, it signifies a bull run, right? A bull run is essentially an explosion in volume, volatility, momentum, velocity of price action. Is a surge in the space, a massive surge in the space, much larger to prior price action. And that is what the trend angle is suggesting. And therefore we can assume that above this dotted trend line is where the bull run really started to kick off. So going back to this chart over here, we can see the bull run really started to kick off over here. We had a huge rally for Bitcoin from that price point upwards. We saw a 260% rally. That 260% rally took us to the 4th of January. If we take a look at that same period of time for altcoins, from that breakout point, which was again on the 20th of October 2020, to the 4th of January, we only saw a couple percent, right? We saw a pretty decent rally for altcoins, but it was nowhere near as strong as Bitcoin. We saw 70% on average. Now, of course, there are going to be altcoins that overperform Bitcoin. Of course, there are going to be altcoins that significantly underperform Bitcoin, but this is just the overall average. So on average, we saw a 72% rally in comparison to a 260% rally for Bitcoin. Massive difference. But this is where it all changes. If we take Bitcoin's chart now, sorry, my monitors is glitching out a little bit. If we take Bitcoin's chart now from that high point on the 4th of January, and we say, well, what happens if we moved into altcoins from here and pushed upwards? For Bitcoin, we saw a further 122% rally. But if we go into altcoins at that same period after that first initial pullback for Bitcoin, which is going to be here on the 25th of January, from that point to that respective high point for altcoins, we saw over 400%. So to answer that question based on historical data, the best and most safe time to be looking to get into altcoins is just after the bull run has officially started, once Bitcoin has created that first leg up and then completed that first pullback. At the bottom of that pullback, according to historical data, that will be the best time to start scaling into altcoins. I've been very clear about this the entire time. I'm not personally accumulating altcoins. I haven't been accumulating altcoins at all for the entire last 2 years. In fact, I haven't touched altcoins besides just trading them. I bought Bitcoin very low. We bought Bitcoin at $16,500, okay, to $18,000. We bought all the way down over here, and we sold just above 30,000 on the 14th of April 2023. We have not bought our Bitcoin back. We have not jumped in altcoins, and we do not intend to do so, because if Bitcoin continues downwards, which it very well could do so, altcoins will take a significant hit. So let's talk about that. If Bitcoin continues downwards, where could the altcoin cryptocurrency market cap go? We are looking for a range within this local low range to about 200 billion. This gap over here could definitely fill, and we could see a move back down to retest this area of support, which is going to be that $200 billion level where altcoins could again bottom out. So if Bitcoin corrects one more time, altcoins could go significantly lower. Definitely something to keep in mind if you are interested in altcoins, if you're an altcoin buyer, if you like altcoins, these are things you should be considering for the price action. Furthermore, if altcoins are able to break out of this current structure they have been developing, which is this downtrending structure, we could see a reversal in play for altcoins. We could start to see some altcoins pop off. This again is something you have to consider when taking long-term positions for altcoins. I would also like to say, when you are taking long-term positions, For cryptocurrency, for Bitcoin, for altcoins, there is obviously more you need to consider than just the technicals, just the overall trends. It comes a lot down to personal preference. Things like time horizon, things like short-term debt liabilities, available cash flow, incoming cash flow. These are things you have to consider when taking long-term investments. Because when you do invest for the long term, that money that you are investing has to be locked up for a decent period of time. If you are checking on that investment every 5 minutes, every day, every 2 days, chances are you've probably got too much money in there or money you cannot afford to lose. When you're making long-term investments, you should really consider that money spent. You shouldn't really pay attention to it until that time horizon has been met. Let's go ahead, guys, and jump into Bitcoin charts and discuss the short-term price action and wrap up the video. So hopefully we've given you a good summary on what is going on there with altcoins, with Bitcoin, with volume. Now we'll go over to the charts. As you can see, guys, Bitcoin has, of course, entered a weekly downtrend. The weekly downtrend has been going for quite some time now. Again, we've been in this weekly downtrend for about 10-15 days, ever since we broke down from this uptrending support level. This uptrending support level was of course the high time frame trajectory or overall trend that reflected the uptrend Bitcoin has been in since the start of 2023, quite literally developed on the 1st of January 2023. Ever since then, we have broken down from this level, representing a shift from a weekly uptrend into a weekly downtrend. Currently, we are weekly bearish while we remain below this uptrending diagonal trend line. Below 24.4K, we enter a monthly bearish trend. 24.4K holds significant significance. I just said the same word twice. Holds incredible significance. It is going to be the horizontal base level of support according to a 400-day long range. If we take our date range over here and drag it across, we can see this area is about a 400-day long area of support. Again, it also marks the base level of support in which this entire cluster of price action has developed above this level, meaning a breakdown of that level will deviate the price action below and could potentially trigger a continuation toward the downside. So from a horizontal level, this is an incredibly important area of support. From a technical level, it again has a degree of significance. If we go to this chart over here and bring up the Gaussian channel on the weekly chart, we can see on the weekly chart, it actually marks the midline of the Gaussian channel, which is going to be sitting at 24.4. A loss of the midline of the Gaussian channel almost always results in a breakdown of the lower band of the Gaussian channel. The lower band of the Gaussian channel is sitting at 20,500. So I'll say it again, a loss of 24.4 almost always results in a breakdown of the lower band of the Gaussian channel, which will, at a high degree of probability, take Bitcoin under or at 20,000. How does that match up to a structural analysis? Well, if we take the measured move, okay, from the peak of the head to the neckline and drag it to the breakdown point, we can see that takes us directly, look at this, it takes us directly to this volume spike on the VIPV to the dollar at 19,200. That is going to be the target for the breakdown according to the measured move. And of course, if the 24.4K level is lost, this move over here will enter us into a monthly bear market, a monthly downtrend, and will validate this as a potential target. Keep that in mind. That is not a potential target yet until this structural level of support is lost. If lost, then this is the expected move. Furthermore, for those of you who watched yesterday's video, you would know we did a structural analysis and a date range and percentage-based analysis of September's, and we can see the average drawdown percentage for September at a 75.6% chance of it being red is 5.43% in the red. If we take a 5.43% move from 25,800 okay, down to 24.4, it takes us to this level on dot. We'll go ahead and show you how specific this is. 25,800, okay, 24,400, it takes us 5.43%, which matches that 5.43% drawdown ratio, expected average drawdown based on historical data from September drawdowns and move upwards on average. So pretty significant how important 24.4K is. If it is lost, it will trigger the next move down for Bitcoin. But the short-term charts are really going to be determining whether or not we actually create that move down, as we are in a horizontal consolidation. The horizontal consolidation has been now going on for what feels like eternity, guys. You know, a week in cryptocurrency sometimes feels like a month in real life. We've been in this channel for nearly 2 weeks. We're coming on 12 full days now in a tight horizontal consolidation, and the range of this consolidation is only 2%, or it's less than 2%, which is very, very, I would say, annoying, to be honest. It's pretty annoying, but it is what it is, guys. Trading sometimes isn't as fun. There are sometimes less opportunities, but while there hasn't been many opportunities on Bitcoin, there's been plenty of opportunities on altcoins, which has been great. But this tight range will eventually come to an end. I like to think of it like a pressure cooker. When you compress and compress and compress for longer and longer and longer, the pressure builds up, and eventually it just pops and it just goes in one direction. We've seen it happen before. Very likely to see it happen again. And the direction it will go will be determined on the directional break it undergoes, meaning a break toward the downside will result in that correction downwards. We do expect a break under 25.8, resulting in a move to 25.2 to 24.4, so quite a large range. A break toward the upside, we do need to see, again, this horizontal level breaking. We do have this diagonal confluence point actually retesting this horizontal level, which will result in a continuation back up to around 27K. If 27 breaks, we look for 27.7K. If we take a look at the overall indicators over here, we can see RSI, CVD, open interest, all suggestive of two things. Number one, they're definitely suggesting compression and consolidation, but number two, they're also suggesting to some small degree we have an element of exhaustion. All right, now I'm going to say to some small degree because it isn't significant. It's only very so slightly suggesting exhaustion. More or less, it's suggesting a neutral consolidation with a slight advantage to that downside break, as we are seeing a degree of exhaustion in momentum. Again, that signifies a potential correction toward the downside. So if you're going to take anything away from the short term, understand neutral consolidation, pushing sideways. Metrics are slightly suggesting we have an increased probability of a breakdown, as they are actually showing us a degree of exhaustion. However, that is not validated and it's not confirmed until the price breaks down from the overall structural support at 25.8. Until then, a move either way is very possible and very likely. Thank you for watching, guys. I hope you enjoyed. I hope you learned something new, and I'll catch you guys in the next video. Thanks for watching.